This is Barry, and Barry's got a secret. Actually, Barry's got a lot of secrets, but today, just the one. The others are between Barry and his offshore accountant, and frankly, that's none of your business. See, Barry is a businessman, a very successful businessman. The kind of successful where the suit is slightly too tight, but Barry doesn't care because Barry can afford 3 more. And if you were to look at Barry's tax return from last year, you'd find something rather remarkable, a number so small, so suspiciously beautifully small, that you'd think it was a misprint. 0. That's right, Barry made millions last year, and Barry paid 0 in tax. Not a penny, not a cent, all completely legal. Barry checked. Barry's lawyers checked. Barry's lawyers checked. Now, you might be thinking, Barry, how is that possible? I paid 30% last year, and I can barely afford lunch. And that, my friend, is exactly why Barry is Barry, and you are you. This is how the rich legally pay 0 tax. Explained by someone who would know. So before Barry lets you in on the secret, let's make sure we're all on the same page. Every year, the government takes a cut of what you earn. This is called income tax. The idea is simple. You make money, you hand some of it over. The government uses it to fix roads, run schools, pay for things that keep the whole operation running. Now, here's the part they teach you in school. The more you earn, the more you pay. It's called a progressive tax system. Sounds fair, right? Sounds almost noble, except here's what they don't teach you in school. The rules were written by the same people who could afford to hire someone to get around them. And that someone, more often than not, looks a lot like Barry. Let's start with the basics. The first trick is so simple it's almost embarrassing, almost. Barry doesn't earn a salary. See, when you earn a salary, the government taxes it as income. Standard rate, no negotiation. It just disappears from your paycheck before you even see it. Gone. Poof. Off to fix a pothole somewhere, presumably. But Barry doesn't do that, because Barry's paid in something called capital gains. Here's how it works. Instead of taking a salary, Barry owns shares in his own company. The company grows in value. Barry sells a few shares. That's income, except the government taxes capital gains at a much lower rate than regular income, in many places almost half as much. So Barry earns the same amount as you, but Barry pays a fraction of the tax rate, legally. Barry really must stress the legally part. Barry's lawyers are watching. Barry's lawyers are always watching. Jeff Bezos did this. Elon Musk does this. Most billionaires do this, and it's not a loophole exactly. It's in the rule book. The rule book that, funnily enough, very wealthy people had a significant hand in writing. Funny how that works, isn't it? Huh? But that's just the beginning. Barry is just getting warmed up. Now here's where it gets interesting, and Barry wants you to pay attention here because this is where the real magic happens. Barry does love a bit of magic. Imagine Barry buys a car for his business, a very nice car, leather seats, heated everything, the kind of car that makes people in traffic jams look over. Barry uses this car to drive to meetings, or at least Barry says he does. What Barry does in the car is Barry's business, literally. It's a business expense. The government says, fine, business expenses reduce your taxable income, so Barry writes off the car, and the lunch, and the home office, and the trip to a conference that happened to be in the Bahamas that one time. Lovely conference. Barry barely remembers the sessions, but the pool was spectacular. Barry has not retained a single thing from a conference in 11 years. Barry has written off every single one. Every dollar Barry spends on the business is a dollar the government can't tax. So Barry makes sure that as much of his life as legally possible runs through the business. Barry's very thorough like that. The result? On paper, Barry barely made anything. In reality, Barry is doing just fine. Barry's doing great, actually. Thanks for asking. And here's the kicker. Regular employees can't do this. You can't write off your commute. You can't write off your lunch. The rules that allow this exist almost exclusively for people who already own businesses. In other words, people who already have money. Barry finds this a very sensible arrangement. But wait, there's more. Because Barry's absolute favorite trick is one that most people have never even heard of. Barry's been saving this one. It's called depreciation. Barry loves depreciation, possibly more than his firstborn son, certainly more than his second. Here's how it works. Let's say Barry buys a building for his business worth $10 million. The government says buildings wear down over time. So every year, Barry can deduct a portion of that building's value from his taxable income, as if the building is slowly losing value, except, of course, the building isn't losing value. In most cases, it's going up. But, on paper, for tax purposes, it goes down. which means Barry gets to show a loss every single year on an asset that is making him richer. Barry is losing money so fast, he can barely keep up with his third holiday home. Donald Trump reportedly used this exact strategy to declare hundreds of millions in losses. While living in a gold-plated penthouse. Barry is not here to judge. Barry is here to take notes and perhaps send a thank you card. And then there are the offshore accounts. This is where things get a little spicy. Barry wants to be very, very clear. Everything Barry does is completely legal. Barry has a very good lawyer, several, actually. Barry sends them a fruit basket every Christmas. They deserve it. See, many countries in the world have decided to attract wealthy businesses by offering extremely low tax rates. The Cayman Islands, Luxembourg, Ireland, places that looked around, saw they didn't have much going on and said, fine, park your money here, we'll barely tax you. Companies said, yes, please, moved their money there on paper and paid almost nothing. The country gets a tiny cut. The company dodges a massive one. Barry calls this a win-win. Barry is one of the winners. Barry has visited the Cayman Islands 14 times. Always for work. Definitely always for work. So Barry sets up a company there. Barry's main company pays fees or royalties to Barry's offshore company. The money moves. The tax bill shrinks. And somewhere on a beautiful island, Barry's paperwork is having a much better time than you are right now. Apple famously kept hundreds of billions of dollars parked in Ireland, where the tax rate was a fraction of what it would have been in the United States. Google does it. Amazon does it. Nike does it. This is not a conspiracy theory. These are documented, public, entirely legal arrangements. Barry cannot stress enough how legal all of this is. The European Union has spent years trying to claw back billions in unpaid taxes from these companies. They've had mixed results because the rules that allow this were baked in long before anyone thought to complain about them, almost as if that was the plan. Now, Barry wants to pause here and ask you something. Put down your lunch. If you wrote the rules of a game, do you think you'd write rules that made you lose? Of course not. Nobody does that. And neither did the people who wrote the tax code. See, the dirty little secret behind all of this isn't that rich people are smarter than everyone else. Barry will be the first to tell you that some of his colleagues are absolutely not smarter than everyone else. Barry went to school with these people. Barry has seen the exam results. But they are richer. And rich people can afford lobbyists, people whose entire job is to walk into government buildings, shake the right hands, and very politely suggest that certain rules get written in certain ways. It's a perfectly normal profession. Barry has 2 of them on speed dial. In 2023 alone, corporations spent billions lobbying the U.S. government. And funnily enough, a disproportionate amount of that lobbying was focused on keeping tax rules exactly as they are, keeping the capital gains rate low, keeping the depreciation rules generous, keeping the offshore arrangements intact. The regular person doesn't have a lobbyist. The regular person has a W-2 form and a deadline and maybe a strongly worded letter that nobody reads. Barry finds this deeply funny, and also slightly sad. Mostly funny. Sorry. So, what's actually being done about it? Barry's glad you asked, mostly because the answer delights him. The global minimum tax is one attempt, a deal between over 100 countries agreeing that no matter where a company parks its money, it should pay at least 15% tax. Sounds reasonable, except 15% on billions is still a lot less than what the average worker pays on their salary. And the loopholes around even this minimum are already being explored by the same lawyers and accountants who got us here in the first place. Barry's accountant already has 3 ideas. Barry gave him a pay rise. Barry needs that man happy. Some countries have tried wealth taxes, taxing not just income but the total value of what someone owns. The results have been messy. Wealthy people simply move to friendlier jurisdictions, with their accountants in tow and their paperwork in a very secure briefcase. Barry has a bag packed. Barry has always had a bag packed. The problem isn't lack of ideas. The problem is that the people with the power to fix the system are often the same people who benefit from it staying broken. And that, as Barry will tell you with a very straight face, is just how it goes. So here's where we land. Barry paid 0 tax last year, legally, using strategies available in the rulebook to anyone wealthy enough to have a good enough accountant to find them. The average person pays 20, 30, 40% on every paycheck before they even see it. Is it fair? Barry will let you decide that. Barry has already decided. Is it legal? Absolutely. Barry cannot say this enough. Is it ever going to change? Well, that depends on whether the people writing the rules decide they've had enough of writing rules that benefit themselves. Barry will wait. But the next time you see a headline about a billionaire paying less tax than their cleaner, you'll know it's not an accident, it's not an oversight, it's not a glitch in the system. It is the system, working exactly as designed by the people it was designed for, Barry included. Barry waves goodbye. Barry has a lunch to write off. And for legal reasons, this entire video is satire and is about a completely fictional businessman in a completely make-believe economy who bears no resemblance to anyone real, living, or otherwise. Please do not sue Barry. Barry's lawyers are very expensive and frankly, they've earned a rest. Thank you for watching. Barry will see you in the next one.